Tech has been in the spotlight for most of this recent rally, but energy stocks have quietly moved into a leadership position, with the sector becoming the best performer over the last month. Our next guest sees more upside ahead for the space. RBC Capital Markets' Lori Calvasina is here at Post 9. Lori, good to see you.
Good to see you. Thanks for having me.
So this in the context of a broader market, it feels like a lot of your work is pointing to kind of fairly valued, perhaps, but there are things to do, maybe unexploited areas. Why does energy get into that category?
So it's funny, Mike. I was talking to some of my salespeople earlier today, and I said sectors just haven't been that interesting of a discussion lately. And all of a sudden, energy got really interesting, and it just sort of had this big move. We've been overweight. We viewed it as an inflation hedge in the portfolio, and guess what? Everyone's gotten worried about inflation again and interest rates, and so it's kind of doing what we hoped it would do. It's serving the right function. But putting that issue aside, I mean, it's cheap. My analysts like it much more so than my analysts in other sectors, so I think that's an important read on fundamentals. And money flows, if you look at the EPFR data, is starting to shift back in areas, commodities, materials, energy, industrials, kind of these cyclical areas that should benefit if the economy really is running hot the way everyone's worried. So,
and is that your read on it? Because, I mean, obviously the underlying commodities have had a move as well. You feel like it's kind of a global demand overlay?
I think it's the U.S. is running pretty hot. Obviously, there's geopolitics when it comes to energy and some of these commodities. But I do think there is a begrudging acceptance that we're not on the brink of recession and things are not that bad. And maybe not so much the last couple weeks, but maybe about a month ago or so, there was a conversation about a bottoming in China that we were hearing a good bit about. So I think we're, kind of in this weird healing process, and energy is benefiting from that right now.
You do mention the general acceptance, this embrace of the not just no recession, but things look like they're humming along pretty well. It felt like that motivated a lot of people to allow, equity exposures to go up and buy into this market as it went higher. Are you struggling to substantiate possible further upside in the index?
So, there are conflicting cross currents right now. And in my meetings, this is a big thing we talk about. So on the more constructive side, my valuation model's been pointing to upside to, say, 5,400 or so, multiple of around 23.3 times on a trailing basis. That's if you buy the idea that interest rates are going to moderate, the Fed's going to do a certain amount of cuts, and inflation's going to come down, 10 years going to come down. And maybe those are a little bit aggressive. We wrote about that in our weekly today, and we said if you just leave interest rates where they are, and depending on your earnings view, it's more like 5,000 to 5,200, so right where we're stalling.
Right.
But sentiment is a problem. Now, people don't feel all that great when you talk to them. They're in kind of a bad mood. But if you look at the positioning data on CFTC, it's pretty scary, and it's starting to retreat. So I think we're going to have a pullback. I've been saying that since January. It hasn't happened, but it's going to come sooner or later.
Yeah. No, it's the part of the market that has, I guess, prevented that from really taking hold is so hard to handicap, right? Yeah. It's kind of like the big growthy stuff, a few of those working at any given time, and the index is going to move away from it.
Yeah, and I think it's an interesting debate, right? Because there's this view, if those stocks break down or stop leading, it's going to be a disaster for the whole market. And I can see that argument, but I also, sort of view it as like raindrops and buckets. And if I'm an old small cap strategist, right? So if you take a little bit of money out of some of these Mag 7 names and put it into the Russell 2000, that's a lot more meaningful to the Russell 2000 or your average regional bank than it is to some of these big cap names. So I think it's a question, do they really run into problems and fall? Do they just take a breather and stop leaving? Do people just divert a little bit money, and kind of reallocate their portfolios? The latter camp, I think the market can still do fine.
Yeah, I was pointing out, Tesla lost $700 billion in market value, peak to now.
Yeah.
And, it got absorbed somewhere else.
And remember, November and December was a pretty violent leadership rotation, and the market surged. If you look at February, small caps outperformed, and the market held on pretty well, and we've had a good start to this year, even though you have had some rotation underneath the surface. So I think the market can handle rotation. Does it contribute to some of those speed bumps that might, kind of be nasty for a short-term period of time? I think that's possible, too.
Right. That's been the focus on just the momentum factor and whether that unwind really destabilizes something else. Now, you've mentioned small caps a couple of times. What is your stance in terms of large versus small right now?
So we've, and it's funny, this maybe happened a little bit earlier in February than I anticipated, but we basically said coming into this year, small caps got 2 consensus in December. I was talking about it in too many of my meetings with non-small cap people, and I said, I'm not used to being the popular girl at the dance. And so that just felt a little uncomfortable. So I think it was natural to take a pause. I think that basically that November-December move was all about the Fed cutting rates. And we said, our positioning data, our valuation data looks middle innings. We think there's another leg to this trade, but people need to really get convinced that the economy is running hot for that to sustain. And you probably just need to actually get to the cuts, because until we get to the cuts, I don't think people are going to be convinced that the Fed, can do what they're doing and the economy is not going to take a bad hit.